Eric in Long Island is asking a process question. He understands how you should be using the IVOL premiums and discounts in the process, but not clear on how you should be thinking about the Z-scores, IVOL trends, RVOL trends, et cetera. Can you walk us through how we should be implementing these components?
Yeah, well, I mean, you just have to think about it as another tool in your toolbox. So you know how you like, I work with my dad a lot, and I'll never be able to do what he can do with tools. But if I go to his toolbox and I look, if he says get a screwdriver, you know how many screwdrivers are in that toolbox? You know how many different shapes and lengths and colors of, and well, what one? Initially, and he'd be like, oh, you're an idiot, get out of here. Of course you need to have multiple tools if you want to build something that's relevant, stable, and again, produces something for you over time. So again, implied volatility signals are quite simply one other weather vane to think about when you're making a decision. So the example that I used this morning is that instead of 28% implied volatility discount in gold, where I was selling gold, now it's a -4. So it went from -28 to -4, relatively speaking, and behaviorally speaking, sentiment-wise in options, futures and options space. That's good. It's better than buying gold, any other day that we could have bought it. And if you get an implied volatility premium because Art is freaking out this morning, and another 10 million people are too, which I don't think that many people own gold, then there it is. You get to transact at the edge with an informed view. Like tomorrow morning, I will not be surprised at all if that implied volatility -4 says plus something. Then you're like, wow, it's the first implied volatility premium that we've been able to buy gold in 2 months, or a month at least, and that's great. It just augments your decision making. It doesn't drive it, it augments it. So again, you don't know what screwdriver you're going to need. You got a lot of them. Again, you come to my garage, I don't know what half of them do because my dad put them in there.
Yeah, totally. And I'll just for more to help folks with process, I'll kind of break this down. We have a variety of indicators and analyses that we use to help investors manage macro risk. I would say the things like the quads, the fundamental analysis really helps you with the what. What do I want to be long? What do I want to be short? Not at every price and time, but what creates the list, the buy-sell list?
What could I be?
What could I be long?
Where could I have interest?
Where could I have interest? Where should I focus my research time? And then things like your signaling process, obviously, and then the implied volatility, realized volatility relationship that we show, that's kind of the win. That helps you build conviction on, do I act now? Why am I not acting now? And specifically with respect to implied vol, realized vol relationship, I think there's probably 3 real signals to glean from that. You don't always get a signal in every asset class every day, but I would say the first major signal is when an asset class or security goes from a persistent implied volatility premium or discount to the reverse.
Yep.
Like that was the S&P 500 in mid-February.
Yep.
That's clearly the biggest signal. Again, you don't always get those. And then I would say the second second and third, tied for second rather, is when you have a very high level of realized volatility, so like 85, 90, 99, 95th percentile realized volatility, but an implied volatility premium. So consensus is hedging after the move.
Yep.
Or if you have a very low level of realized volatility, like 10, 20% realized vol, probably breaking down below that, and an implied volatility discount, which means consensus is complacent after a positive uptrend. And so whenever you spot those things, again, I track this across 250 ETFs every day. Right now there's 17 positive buy signals, 0 sell signals, and that's against 250 ETFs. So you don't always get a signal, but when you spot those signals, it obviously helps you to sort of pull them back into the process.
And those sell signals, if you go back to the implied vol table, see how it says 1 day ago, 1 week ago, 1 month ago. It doesn't say back to when Luke Roman went bullish or bearish on something. It says, again, you're measuring and mapping it deliberately, daily, weekly, and against 1 month momentum. Okay? So when you're doing that, you have to do all that work before you make a decision. Mm-hmm. Again, and I hope you respect this. If you're new at this, you're like me going to the toolbox. Who would you rather fix the damn thing, my dad or me? So part of this is just taking my word for it. Well, the guy gave me all these tools and he seems to know what he's doing. Maybe you should overweight that. What I'm, do I need to make you feel conviction in gold today? No, it's just kind of, that's why I kind of make fun of the behavioral part of it. So understand that this is a pro's game. This is not for, this is no process for old wall men.